Here's a quick rundown of the SPX price action from April the 9th, 2025, and targets using anchored volume weighted average price. The SPX jumped 9.52%, closing at 5,456.9. That's currently down 11.9% from the most recent high close on February the 19th. The SPX narrowed the gap between the close and the 200-day moving average, now sitting at 5.52% below the 200-day simple moving average. The January 4th, 2024 anchored VWAP declined to 55.33. This support level was tested 3 times before losing support. The 10/27 2023 anchored VWAP was breached on April the 11th, and that was the first breakdown below that level. The SPX yesterday closed above this level. The 10/13 2022 anchored VWAP sits at 49.17.4, and this level has been tested 3 times. A level of 49.15.32 represents a 20% drawdown and would officially indicate a bear market. We have not closed below that level yet. The MACD is negative and crossed below the signal line, and it's converging now. That indicates still that we're on a sell signal. The RSI is sitting at 45.08. It rose 111% from the previous close of 21.36. The SPX has moved out of an oversold condition. The trading volume was 87.9% above the 50-day moving average. The VIX fell to 33.62, a 35.75% drop, compared to the previous day's close at 52.33. This is still an elevated level, indicating high uncertainty. I expect continued volatility over the next few weeks with continued sideways trading. The implied move for April 17th, 2025 dropped to plus or minus 4.14%. I want to take a look at what we discussed yesterday. We were looking at the cyclical bear markets of 2020 and 2022 through 2024. But I didn't show them side by side, and I want to do that today just to show you the comparison between the two bear markets. So we declined pretty rapidly in 2020, down about 33%, and it took us until this point to exit out of the cyclical bear market. Then if we compare that to the 2022 through 2024, we can see it took quite a bit longer to reach the maximum down point of about 25%, and it took us quite a bit longer to reach the exit of that cyclical bear market. So I just wanted to show these side by side to give you a comparison, because I did not do that yesterday. If we go to stock charts, we can see an overview of the markets and how they closed yesterday. The Dow was up 7.87%. S&P 500 was up 9.52%. The NASDAQ jumped 12.16%. The VIX did have a pretty significant drop down to this 33.62. If we look at the sector action, we can see that technology, consumer discretionary, industrials were the leaders. Consumer staples, utilities, and healthcare, commonly thought of as defensive, were at the bottom of the list, but still had a pretty sizable increase for the day. There was also good movement in the advancers versus the decliners in each one of the indexes. If we take a look at the TLT as a proxy for the 10-year Treasury yield, we can see that there's been a little bit of distress in the bond market over the last couple of days, and reports that I've been reading seem to indicate that this is related to a basis trade where hedge funds arbitrage and leverage the futures market compared to what the bonds are actually trading for today. And it seemed like there was some forced selling over the last previous 2 days, but yesterday we did get a little bit of a rise in the price of those TLTs. So that'll be something to keep an eye on over the next few days. And if we move over to the futures, see what today might hold, we can see that the three major indices are down all over 1%, with the NASDAQ down 2%. So that may give us some indication of what the price action will be today. So I recommend that you keep your seatbelt securely buckled around your waist as we navigate this volatile market. Hope you have a great day. Thank you.